If you want to time the Canadian real estate market, you wait till the bottom, right? What if the bottom may be closer than you thought? And that comment is sure to get everybody talking in the comments below. We'll get to that later in the video. But welcome everyone back to another monthly Canadian real estate market update here on Bald Prairie Real Estate. This is the most comprehensive monthly update you are going to find on the Canadian real estate market. My name's Matthew. That's 𝗲𝗲𝗲𝗲𝗲𝗲. Looking at the numbers, we're starting to see some really interesting trends shaping up in the Canadian real estate market. And I'm going to talk about that at the end of the video after I've gone through all the numbers. But I think you're going to find them really interesting because they surprised me. So I expect they're going to surprise you. Let's dive into it. But before we do that, we're going to start off with another terrible joke. What do lawyers wear to work every day? Lawsuits. If you have a terrible joke that I can use in a future episode of Bald Prairie Real Estate, put in the comments below, like this video, and subscribe if you haven't already. In Victoria, 478 homes sold in a month. That's down 37% from the 5-year average of about 760 homes that typically sell in a month. And there were 990 homes put up for sale. That's down 6% from the 5-year average. Normally it's about 1,050 homes that we put up for sale in a month. And so active inventory is a little over 2,100 right now. That's down from the 5-year average by about 15% of 2,200 homes we typically see for sale right now. Months of inventory is now 4.5, kind of right in the middle of a balanced market in Victoria. The composite benchmark price in Victoria dropped once again. It's now about $960,000. That is up 19% from last year, but down about 3.5% from the peak we saw a couple of months ago. And last month I talked about how typically we do see a slowdown in Victoria this time of year, but I don't think this is a seasonal slowdown. I think this is more indicative of the overall slowdown we are seeing in the Canadian real estate market, mainly due to those higher interest rates and fear in the market right now. And so I've got the market pace in Victoria as slower than normal. There were just under 1,900 homes sold in Vancouver last month. That's down 30% from the 5-year average. Normally about 2,700 homes will be sold this month. There were 3,300 homes put up for sale in the month. That's down 23% from the 5-year average of about 4,300 homes that would normally be put up for sale in the month. And active inventory dropped below 10,000 homes for sale. That's down 17% from the 5-year average. Normally about 11,600 homes would be up for sale this time of year. And usually from July to August, we see inventory levels increase. This year we saw inventory levels decrease by about 5%. And months of inventory in Vancouver is 2.9. That's right on the edge of a seller's and a balanced market. The composite benchmark price is about $1.2 million. That is up 7% from last year, but down 7% from the peak we saw a few months ago. And remember, the further you go away from the downtown areas of Vancouver, the more significant the price declines are right now. When I'm talking with agents from Vancouver, they said they are starting to feel like there's a little more stability and balance coming back to the market. Buyers are coming back looking at places because they're seeing buying opportunities that they didn't have just a few months ago. And when I'm looking at the data that I keep records of, for example, the number of new listings coming on the market, well, 3 months in a row, that has gotten worse versus the 5-year average. And we're seeing that reflected in inventory levels. 2 months ago, inventory levels were 9% below the 5-year average. This month, 17% below the 5-year average. For downward pressure to continue in Vancouver, we need to see inventory levels increasing, new listings increasing, and sales decreasing. Right now, we're only seeing really one of the three. But that slow month of sales and the continued slowdown in sales is why I've got the market pace in Vancouver at much slower than normal. You know, I keep seeing headlines about how sales and prices continue to decline in Calgary, yet with 2,100 homes sold in a month, that's up 26% over the 5-year average of about 1,700 homes that are sold in a month. And the 2,700 homes put up for sale, well, that's down 4% from the 5-year average. Normally about 2,800 homes are put up for sale. And the big one here, there's less than 5,000 homes for sale in Calgary. That's down 30% from the 5-year average, where typically there's closer to 7,000 homes for sale at this time of year. So months of inventory is 1.8 in Calgary. That's a very strong seller's market still in Calgary. But then why did the benchmark price in Calgary decline? I'll talk about that in 1 second. Right now, that benchmark price is $531,000. It's up 14% from last year, but down about 2% from what we saw a few months ago. So if anyone is telling you the Calgary real estate market is crashing or it's about to crash because prices are starting to decline, well, this happens every single year. Whether it's been a hot market or a cold market, usually from June to September, we start to see prices decline, and this continues on until we get into January, February, where prices start to pick back up again. Happens every single year. But even with all that, the market pace in Calgary is still much busier than we typically see this time of year. In Edmonton, 1,800 homes were sold in a month. That's up 2.5% versus the 5-year average of about 1,760 homes sold in a month. There was also 3,100 homes put up for sale in a month. That's up 3% from the 5-year average of about 3,000 homes put up for sale in a month. And there's just under 8,000 homes for sale in Edmonton. That's down 3% from the 5-year average of about 8,200 homes up for sale this time of year, putting months of inventory at 4.4, kind of right in the middle of a balanced market territory in Edmonton. And that composite benchmark price has pretty much remained flat for a number of months, about $400,000. It's up 8% from last year, down a couple of percent from a few months ago. But there is a trend that kind of looks like it's starting in Edmonton, and that is things are getting a little bit busier. As I said, sales are up, listings are trending down. You put those together for long enough, and that's the formula for prices starting to rise again. And the market pace in Edmonton, well, that's slightly busier than it normally is this time of year. We saw 341 homes sold last month in Regina. That is up 17% from the 5-year average of 292. It's actually more homes sold this August than August of 2021 in Regina. And 462 homes were put up for sale. That's down 4% from the 5-year average of about 480. So that leaves about 1,100 homes up for sale right now in Regina, which is down 23% from the 5-year average of about 1,400. And the months of inventory is 3.2, right on the edge between a seller's and a balanced market in Regina. The composite benchmark price, $327,000, up about 3% from last year. This August was kind of a sneaky busy month. If you talk to most agents, they probably tell you they didn't feel as busy, and yet we still saw obviously more sales than last year and well above the 5-year average. So even though maybe it didn't feel busy, it still was much busier than we'd normally expect it to be this time of year. And while we aren't seeing multiple offers on houses nearly as much anymore, there's still a lot of houses that are selling pretty quickly, and that's why I've got the market pace in Regina as busier than we normally see at this time of year. In Saskatoon, 440 homes were sold. That is up 14% from the 5-year average of 387. And there were 660 homes put up for sale in the month. That's down 6% from the 5-year average of 751. So that leaves inventory at just shy of 1,200. It's down 33% from the 5-year average of about 1,800 homes that would typically be for sale this time of year, meaning months of inventory is 2.7. That's right on that edge between a seller's and a balanced market territory. The composite benchmark price is up 6% from last year, about $384,000. So when I'm talking with agents in Saskatoon, they're kind of seeing the same thing we're seeing in the numbers and the trend lines, and that is things are starting to get a little bit busier in Saskatoon. We'd normally expect them to start to be slowing down. We're seeing it in average price, median price, all those metrics that agents are tracking there. Starting to see things creep up. We haven't seen it yet in the benchmark, but if these things continue, you will start to see that show up in the composite benchmark price. That's why I've got the market pace in Saskatoon is busier than normal. In Winnipeg, about 1,400 houses sold. That's down 15% from last year. There were 2,200 homes put up for sale. That's up 2% from last year. There are about 3,700 homes for sale right now. That's up 29% from last year. Even still, months of inventory is 2.7 in Winnipeg, so still just slightly in a seller's market. The benchmark price is $350,000. That is up 6% from last year, but it's also down about 6% from what we saw just a few months ago. Remember though, it's not uncommon to see prices start to slip in Winnipeg this time of year, but this is also indicative of the overall slowdown in the real estate market. Talking with agents, they are saying that yes, we're seeing things shift back towards a more balanced market, and that's good for buyers because there's more stability, and we're not seeing that frantic pace that we were seeing in Winnipeg where everything was selling over asking, not nearly as many of those multiple offers anymore going on. And we're talking with them, they're saying, yeah, it's slower than it typically is this time of year, so that's why I've got the market pace in Winnipeg. It's slower than normal. 1 or 2 months doesn't make a trend, but there's some interesting things starting to shape up in the Toronto real estate market. That 5,600 homes sold last month. Now that is down 30% from the 5-year average of 8,000 homes sold, but it's actually an increase of 11% from the month before. Normally we see sales decrease 4% from July to August. So to see an increase, that's really interesting. Again, 1 month isn't a trend, but it's something to start watching. There were 10,500 homes put up for sale in Toronto. That is down 24% from the 5-year average of about 14,000 homes put up for sale. And again, remember, a significant number of these new listings are really just the same property being relisted multiple times. So the true number of new listings is down quite a bit more than that. And with 13,000 homes for sale right now in Toronto, that's down 11% from the 5-year average of about 15,000, meaning months of inventory is 2.4. That means Toronto is shifting back towards a seller's market. Again, 1 month doesn't make a trend. The composite benchmark price in Toronto across the entire area is up 6% from last year, $1.124 million. But that, of course, is down nearly 20% from March. Hold on to that thought for just one more second, because there's more to that story than meets the eye at first. So when I'm talking with real estate agents in Toronto, the doom and gloom, well, that seems to be wearing off a little bit, and their attitudes are improving, saying things are starting to balance out a little bit more. A few even said, hey, maybe the bottom is a little bit closer than we thought it is. And much like Vancouver, we're seeing that stability and buyers start to return back to the market. The data I collect is showing that as well. Sales started to pick up slightly. Inventory and new listings are declining. But the one stat that really interested me was that the pace of price decreases in Toronto has slowed down for 3 consecutive months now. Now, still seeing prices drop, but they're not dropping as fast as they were a few months ago. And the market pace in Toronto is slower than normal, but if these data points start turning into trends, we may see that start to shift. In Ottawa, there are just over 1,100 homes sold in a month. That is down 34% from the 5-year average. Usually about 1,700 homes be sold in a month, but it is up from the previous month. Typically, from July to August, we see sales drop. There were also about 2,100 homes newly listed for sale. That is down 3% from the 5-year average of about 2,150 that we would typically see in the month. And currently there are about 3,100 homes for sale in Ottawa. That is up about 3% from the 5-year average of just over 3,000. Even still, the months of inventory is at 2.8, which is right on the edge between a seller's and a balanced market in Ottawa. And the composite benchmark price is $660,000. That is up about 6% from last year, but it is also down about 9% from the peaks we saw a few months ago. What we're seeing in Ottawa is things starting to return back to what would be typical for this time of year. Both inventory and new listings are right within what we typically see. Of course, sales are down significantly. That's the one thing that is quite a bit slower than what we typically see this time of year. And shocking news in Ottawa, hold on to your hat for this one. Buyers can attach conditions to offers. I know for the rest of the country, writing a conditional offer, that's pretty normal. But in cities like Ottawa, this hasn't been the norm for a number of years. Now we're seeing buyers have that opportunity to have inspection and financing conditions. And we're not seeing multiple offers on absolutely everything. The market pace in Ottawa, though, is still slower than we'd normally see, mainly driven by that low number of sales. There were nearly 2,700 homes sold in Montreal last month, but that is down 25% from the 5-year average of about 3,500 homes sold in the month. 5,200 homes were put up for sale. That's up 6% from the 5-year average of just shy of 5,000 homes put up for sale in a month. So active listings is at 13,700 in Montreal. That is down 31% from the 5-year average, though, where typically there's 16,600 homes for sale, but months in inventory is 5.1. That's actually the highest of all the markets I track in Canada right now. And the composite benchmark price in Montreal, $525,000. That is up 9% from last year, but it's actually down about 5% from the peaks we saw a few months ago. Talking with agents in Montreal, they said how July and August were darn near dead. There just wasn't much going on. We're seeing a real slowdown in the market in Montreal. Like I said, they're one of the highest months of inventory in the country right now, and that's why I've got the market pace as much slower than normal in Montreal. In Halifax, 434 homes were sold. That is down 16% from last year. 584 homes were put up for sale. That's down 29% from last year. And there are 770 homes currently for sale right now. That's up about 65% from last year, but the months of inventory still is 1.6. So right up there with Calgary is one of the hottest markets in Canada still. And that benchmark price there's about $535,000. That is up 20% from last year and basically remained unchanged from the month before. Talking with agents, they're saying that sellers are adjusting their asking prices to be more representative of the proper market value, meaning we're not seeing nearly as many underlisted properties and then resulting in multiple offers and places selling over asking. That being said, nearly 40% of houses sold last month in Halifax sold over asking, and their average sale to ask price is 101%, meaning that most places are selling for just slightly above asking. And so market pace in Halifax is a little bit slower right now, but we're starting to see things pick back up again. I will be the first to admit that a month or two's worth of stats, that's not a trend, but it is a data point to start watching. We absolutely have seen sellers and buyers adapt to the new market realities that we have right now. And if we continue to see fewer sellers put their homes up for sale, meaning inventory levels continue to decline, that is going to slow the downward pressure on prices. And much of the rapid price appreciation that we saw from a couple of months ago, a contributing factor to that was likely sellers that had to sell because they had made a purchase already, so they had to get rid of that house in order to make that purchase happen. For the most part, those deals have all happened now. The sellers that have got their houses up for sale appear to be not as motivated to just give those houses away, which might be why we're seeing that slowdown in price appreciation. If these current data points start turning into trends though, the bottom of the market might be closer than we think it is. Now, I promise you, nobody, and especially me, has a crystal ball as to predict when the bottom will be. But these trends are that. They're trends, and they're things that can give us clues as to where the market is headed. And as I've always said, the right time to buy a house is when it makes sense for you and your own personal situation. Time in the market is far more important than trying to time the market. So you buy a house when it makes sense for your personal situation. There are opportunities to buy good houses and find good deals in both highly accelerated, rapidly appreciating markets and markets like we've seen now where there's significant price declines. There's always an opportunity to find a good deal and a good house. And if you want help finding that good deal, well, check out this video right here, which is what the YouTube algorithm says you need to watch next on Bald Prairie Real Estate. As always, thank you very much for watching.